Welcome to my presentation of a private equity approach to value creation with subtitle Profitability Analysis. You can visit us at thepeakgroup.com. My name is Deniz Batuman and I am the Managing Director of the Peak Group. You can email me at deniz.batuman@thepeakgroup.com. Before going into details of my presentation, let me provide a brief background information about the Peak Group. We are a private equity, asset-based consulting company, a team of operational performance improvement specialists, unlocking and accelerating operating value for companies globally through optimizing enterprise costs, profits, capacity, and value. Let me walk you through the table of contents real quick. I start with a few observations and trends regarding private equity value creation. I continue with our execution scenarios and PE approach to value creation. I emphasize delivering first 100-day planning, including multidimensional profitability reporting and analysis. Other topics include enabling the model design and implementation for operational performance improvement key initiatives and deciphering operational complexity. Other advanced topics can be listed as target realization progress, upside-downside scenario analysis, valuation transparency requirements, and mid-course corrections. First, a few observations and trends with regards to private equity value creation. Increasingly, investors have been driving the need for long-term value creation at PE portfolio companies. More global brands are aiming to maximize value from their every transaction. Meanwhile, regulators and investors are demanding valuation transparency and consistency. Another important topic would be granular visibility into drivers of value and performance. Drivers of value includes growth and profitability, or return on invested capital, and is needed for intrinsic enterprise valuations and operational performance improvement initiatives, as well as full potential growth, margin, and profitability targets. We help create tangible value for the following three main execution scenarios or situations. First, operational performance improvement for underperforming businesses and turnarounds. Second, profitable growth for mid to late stage growth equity and buy and build situations. And third, full potential cash generation and EBITDA multiple expansion for mature buyouts. Our value creation process, including end-to-end profitability modeling and analysis, helps execute these scenarios. We offer our PE approach to value creation in two areas. First, our enterprise cost, profitability, and value analytics aims for considerably improving deal success. We offer effective strategy execution, sound decision making, and powerful performance improvement. For this, we deploy our proprietary industry-configured and repeatable value creation process throughout first 100-day planning, holding period, and exit planning. The project completion time here varies from 12 to 16 weeks, and it includes business analysis, data integration, model development, model validation, and value identification. Second, we also provide our services as an extension to the deal or operating team or independently. We perform a rapid and thorough opportunity assessment along with investment thesis potential enhancement during pre-deal due diligence phase. The project completion time here varies from 4 to 6 weeks, and it includes business and data analysis. At first 100-day planning, our main deliverables are value capture roadmap and change plan. This would be as part of value creation initiative planning. Value Capture Roadmap is a critical tool that uncovers actionable insights and value-creating critical actions. It drives full potential target value creation. Quick wins, key initiatives, and high-impact system changes constitute change plan that deals with bottlenecks to augment organizational execution and growth capacity. Our value creation process can be accomplished using industry-configured business and data models, along with value accelerators. Our multidimensional, accurate, and granular enterprise cost, profitability, and value analytics acts as the key enabler. To facilitate value identification and value capture roadmap, we provide multidimensional profitability reporting and analysis. As an example, we can analyze operating results for PET 2-liter versus PET 2.5-liter packages under traditional channel with respect to area sales manager and sales region. The components of operating income is listed from top to bottom, from gross revenue to net revenue through promotions and discounts, and cost of goods sold brings us to gross profit, and operating expense down to operating income. Percentage to revenue and per unit case or volume results provide additional insights into profitability. The red rectangular boxes represent areas for potential improvement. To enable operational performance improvement, we use our costing and profitability model, which I will delve into at the next slide. Our multidimensional profitability reporting and analysis helps identify and capture operating value by any business dimension and level of granularity. Our clients can internalize the process of developing and executing value capture roadmap. Having gone through such a modeling and analysis engagement, our clients can recoup 10x project investment within first year of deployment. In other words, 6 to 10 percentage point EBITDA improvement is possible within 2 years of implementation. In terms of enabling the model design and implementation, time-driven activity-based costing is a critical management tool that enables the design and implementation of cost algorithms and predictive models. At this stage, we calculate, verify, and improve operating results or value for every transaction and business dimension. The dimensions include trade channel, segment, sales force, income level, customer, SKU, category, brand, and package. Results analysis and value identification includes our simulation and what-if analytics capability that allows for iterative optimization to determine full potential growth and profitability targets. For instance, you can analyze profitability of value-destroying customers to come up with targeted or surgical actions on pricing, margin growth, and optimal SKU mix. Such an analysis can help improve sales force effectiveness by trade channel. To continue with the model design, you can see on this slide an activity breakdown of a typical FMCG company. The model consists of activities including volume, gross revenue, deductions, cost of goods sold, and OPEX items such as sales, marketing, warehouse, and delivery. The idea here is to build cost and data algorithms that accurately assign and allocate each operational activity cost to customers and products. Time-driven activity-based costing management tool enables this kind of profitability modeling and analysis. Each transaction is costed out through activities based on corresponding profit drivers or algorithms. We facilitate operational performance improvement key initiatives through our enterprise cost, profitability, and value analytics. Sample key initiatives include revenue growth management, sales effectiveness and channel strategy, pricing margin growth, cost to serve, and customer profitability analysis. Companies generate varying degrees of customer SKU profits, one invoice line item at a time, creating a trail of transaction and driver data across the enterprise. Our profitability analytics solution accurately models and captures this operational complexity. The actual and predictive models decipher operational complexity, process variability, and big data across disparate data sources. Organizational buy-in and change plan are key. We validate operating results with key users, and change plan consists of quick wins, key initiatives, and high-impact system changes. Having deciphered operational complexity, we can analyze customer profitability as well. Underperforming customer versus highly profitable customer can be analyzed side by side with respect to area sales manager and trade channel. We identify profitable customers and profiles. To defend and expand such relationships, pricing margin expansion can be implemented through targeted actions. Underperforming customers can be benchmarked against full potential profitability targets to fix and improve such customers. You can also analyze operating results in detail to come up with findings and recommendations. For instance, on this example, you may consider adjusting the optimal SKU mix and reallocate concession, sales, and marketing resources for this underperforming customer. You can also analyze profitability results on product hierarchy as well. For each trade channel and sales region, you can focus categories and brands to profitable growth agenda and optimal SKU mix. We can also support strategic marketing, brand building, innovation, and growth using brand profitability analysis. Profitable and unprofitable SKUs or brands or products can be determined with root causes of performance. Operating costs on supply chain can be benchmarked per activity, pallet, case, and so forth. An example to target realization progress and upside-downside scenario analysis for each top subtrade channel, area sales manager, and SKU. A summary table can be visualized that displays full potential versus baseline figures, as well as upside-downside scenarios. We identify and prioritize performance improvement actions to determine full potential profitability targets. The alignment of volume potential, price projections, reductions on OPEX budget around profitability helps create full potential budgets and targets. Upside-downside alternative scenario analysis capability facilitates periodic management discussions to cultivate organizational resilience and risk mitigation or downside protection. It's also critical to meet valuation transparency and reconciliation requirements of the regulator and investors. We can offer transparency, consistency, and granularity on drivers of value and performance that help explain valuations, including period-to-period changes. Mid-course corrections and variance reallocations close the loop for further planning cycles. Unrealized gains and losses are allocated to future periods and business dimensions to adjust and improve deal success. During exit planning, we help deliver value capture roadmap for the buyer, a synergy plan for strategics, and value creation for the financial buyer. Please pause for a few seconds to read through my background information. That concludes my presentation. Thanks for tuning in. Please do not hesitate to contact me with questions or comments.